Hi, I'm Cynthia Murphy, investment strategist at VettaFi, and I'm joined today by my colleague Roxana Islam, and we're going to talk about some of the trends we're seeing in the ETF space. So I think we start, Roxana, with the crypto story, which has been one of the biggest stories this year. In terms of the product development, we've seen just in the past week or so, ProShares come out with 6 filings of different Bitcoin, Ether combination funds, hashtags as a new filing. So the product machine is full steam ahead. And you've done a lot of coverage in the space.
Mhm.
Like, what's your big picture on what's going on in crypto ETFs these days?
Yeah, so I've done a lot of work on crypto, and I think it's important to go back to see what happened in January, because in January we had the spot Bitcoin ETF launch, right? And this launch, it was looked forward to for many months, and it did not disappoint. This became one of the biggest launches on record. And I think going into the spot Ether launch last week, I think people were a little bit nervous because they were comparing it to the spot Bitcoin launch. I didn't really know what to think, because we saw the Ether futures ETFs be released in October, and those were admittedly a little bit disappointing. But I think they had a good first day. I think they had a good first week. Net inflows that first day for spot Ether ETFs was around 107 million, and compared to spot Bitcoin ETFs, which was I think around 655 million. So a little bit of a difference there. But if you look at the market dominance of something like Bitcoin versus something like Ether, that about lines up, because Bitcoin is about 50-60% of the market, and Ether is closer to 15-20% of the market. So what I saw there was what I really expected to see out of spot Ether, and it sort of confirms that investors are still looking for these Ether products. They're looking for something a little bit more than spot Bitcoin. It isn't just spot Bitcoin and I'm done for many of these investors. And it's sort of like what you alluded to. Now I think we're going to see a bunch of more filings popping up. We're already seeing some pretty creative ones out there. We're probably going to see options at some point. We've already seen the spot Solana ETFs being filed for by Van Eck and 21 shares. So I think there's a lot of room to grow, and I think our constraining factor is just what the SEC is going to do, what they're going to say. Are they going to say, oh, we have spot Bitcoin, we have spot Ether, we're going to sort of draw the line in the sand there? Or are they going to open this up to Solana, and then are they going to open it up to anything else after that? And I guess the second question is there going to be demand? Because, like I said, Bitcoin is Bitcoin. It's sort of mainstream. It's synonymous with crypto. And then Ether has a ton of use cases related to, digital innovation, blockchain. It's when you get to some of these smaller cryptocurrencies, you might not see mainstream investors grasp them as much. But, I still think there's a place for these objects.
So before we got together, I was pulling some numbers, and what's amazing is that January set unleashed this space, and but demand has been consistent even when Bitcoin was kind of struggling there for a while. And so in the month of July, all Bitcoin ETFs picked up assets, and all the new Ether ETFs, like the Ether for my shares, already $442 million since launch. So I think the demand is there, and that really should fuel product development. But I was curious, do you think the investor in Bitcoin ETF is different from the investor in an Ether ETF?
Not exactly, but I don't think it's all inclusive. I think there are some investors that would just be happy with a spot Bitcoin ETF. These investors might be sort of curious about crypto, and they might want it as like a just for fun asset, saying, I've heard these things can have some good return, but they do have some higher risk. So maybe I'll just get a spot Bitcoin ETF in my portfolio and I'm done. And then there's some investors that do want to that sort of access to the future of digitalization, the future of blockchain. And in that case, Ether would also be appropriate. So they might have a mix of spot Bitcoin and spot Ether in their portfolio. But, regardless, it's typically a small portion of the portfolio given how high risk these are. So that's something like 1% to 2% of your portfolio.
But we still see on the conversations we have with advisors every day that the advisory channel is still in the early innings of their due diligence in the space. Do you agree?
No, I agree. And it's something that I've talked to a lot of people about. It's like whether you love it or hate it, you have to educate yourself about crypto, because people are going to ask about it. People are going to ask you about it. And it's better to be prepared and know about these products, even if you're not a big fan of them.
Yeah, I've heard somebody put once, it's a reputational risk to an advisor if you can't have a conversation about crypto. So it's a space that I think is just going to continue to grow. So let's talk about another trend.
Okay.
Let's talk about consumers
Yes.
and some of the research that you've done in that space. We've seen, I think this summer has been a summer of transitions in the market. We've seen like some of the rotation out of some of the most popular plays into some new interesting areas of the market. And I think the consumer story is a big story in that space. How do you see it?
Right. So this is a story that I think has been going on for a few years, maybe even since the pandemic. So we've just had the consumer drive the economy, and we've expected them to relent, and they just haven't. They've just kept driving the economy. We've seen some moderation, but I don't think it was the dramatic sort of moderation that any of us really expected. But going forward, I do see sort of a shift in the way consumers think and then the way they spend their money. So if we look at consumer discretionary, if you look at a broad sector ETF like XLY, or a retail ETF like XRT, if you look at some of these, they don't have the best performance. I think XLY is at about 3% up year to date, and XRT is at about 7% year to date. So we're sort of seeing consumers shift away from these sort of discretionary good products, and they're going into two areas. So they're going into services, they're going into experiences. Things like travel are still very much in demand. Travel demand now for airlines is actually higher than it was in 2019 pre-pandemic. So it's pretty impressive. So some of these travel ETFs would be like cruise or journey or away. But I think performance there has been a little bit stifled because of some of the issues that airlines have been having. So there's been some operational issues in the industry. But overall, I think the travel industry does have a lot of demand going forward. And another area that I've been looking at is sort of like the discount retailer space. And so a lot of this falls into consumer staples. So if you look at something like XLP, that one's actually up 8% year to date. So it's actually doing better than the discretionary sector, which doesn't typically happen unless you're in a down market or in a very volatile market. So it's pretty interesting to look at. And it's not as exciting as something like consumer discretionary, because you don't have the Amazons, you don't have the Teslas, you have these companies like Walmart, you have the companies like Costco that tend to do better when throughout these cycles. So I think we're going to see a lot more movement in the staples this year versus discretionary.
Yeah, I think it's such an interesting, like two sides of the same coin, which is like, let's all go to the outlet mall, but then let's spend our money on an expensive cruise. It's realigning what your priorities are, because I think do you find the consumers are more cash strapped? I mean, the rates have been high long enough, everything inflation, it's been harder that cost of capital. Is that what you're thinking is driving this? Or is it just a seasonality, like travel is big in the summer? Is that part of that?
Yeah, I mean,
moment?
it's definitely part of it. But, I think consumers are learning how to spend money. They may not have this money to spend. They're looking at credit cards. They're looking at their savings. They're looking at more of these store loyalty programs. So they are becoming smarter in the way that they shop, rather than stopping their shopping altogether. So that's why I've seen like a little bit of movement from these sort of discretionary companies. Like Tesla, for example, I think is a big example of a discretionary stock that we talked a lot about beginning of the year in the Magnificent Seven, and now we've sort of seen that drop off a little bit.
Yeah. So on that I think it can bring us to our third topic, the third trend. We think about the rotation out of the Magnificent Seven. And I think we're at that point in the market where we need some serious confirmation of value here to continue. I was looking at some multiples. So for example, if you look at just PE of a tech portfolio like XLK, we're looking at around 30, which compared to SPY, S&P 500, is at 22. If you look compared to a small cap, it's 16. But if you go in the mega cap growth stocks, which are your Mag 7 plus a few, we're talking valuation of PE of about 40. So these things have completely gone away from us. And I think the market is looking for that confirmation. And we're not seeing yet in the earnings season. So we've seen this rotation into more small caps. I've seen some mid caps pop into that space. Do you see that trend also taking shape here, that rotation away from the Mag 7 story?
Yeah, and I think we all saw this coming because for a while it was sort of too good to be true, right? We had these few stocks and they were doing so well and they were just driving the economy, and we're all wondering like, okay, when is this going to end? Especially us like financial analysts, like we know that good things must come to an end. So now I feel like, especially with Nvidia being a little bit shaken up over the past few weeks, I think people are really starting to look towards other avenues of return rather than just putting all their eggs in one basket.
Yeah, it's just a little bit of that diversification story, which in truth we've been hearing all year. It just seems like nobody's quite ever ready to give up on the mega growth story because it just looks so good and you feel so good to see your portfolio rallying. But I think this month of July, we kind of saw that start to change a little bit. And we're seeing money flow, IWM, SPSM, all these small cap ETFs, and some of the mid caps are all in the top 20 asset gatherers for the month. So it's been a big rotation in that space. So should we wrap?
Yeah, let's wrap. I think those were good trends.
I'm really excited to keep watching this market, and there's always something new happening. So for more information, check out VettaFi.com, ETFtrends.com, and ETFDB. We have a lot of content, a lot of data and tools and insights for you. And thanks for watching. See you next time.
Thanks.